So far, we're able to have an all-time high TVL last year of like 14 billion. Currently, we're at 2.5 billion. But our accumulated trading volume for Pendle V2 since launch is around 80 billion now.
What was your reasoning behind the revamp? What were the issues you identified with V-Pendle, and how is that going to impact long-term token holders going forward?
There is no more complications, no need to vote, no need to max lock, and no need to channel incentives across markets. We have an algorithm already in place for that that's currently operating. So it makes it simpler, and it makes it also composable. PTs are actually very capital efficient when it comes to borrowing and lending, because buying PTs, you effectively have a fixed yield, and you can use that as collateral, for example, to go to Aave, lend it, and borrow a stable coin to use it for something else.
GM, and welcome back to episode 75 of the Odyssey Pod. Today, we are joined by RightSide from Pendle. Great having you on. Pendle has been one of my favorite protocols for the past couple of years. Have been talking about it since late 2022. And one of the cornerstones of DeFi ever since 2024 and 2025. Great growth story. And I think we'll get to hear a lot of insights into how Pendle got to where it is right now, where you guys are planning to go, and what is up with Boros and the S-Pendle Tokenomics rebrand. Great having you. And how are you doing?
Yeah, appreciate it, Max. Thanks for inviting us over to share about Pendle, Boros, and also appreciate you supporting us along the way on building this niche, especially yield and rates. It's a lot of work to do, but we're very passionate about it. So yeah, looking forward to the interview. Quick introduction. Yeah, as Max mentioned, I'm part of the Pendle team for the growth side. Yeah, I'm right side handling a lot of like growth stuff there, and happy to share or give you a walkthrough about Pendle, Boros, and what's coming for the next roadmap and the next months to come.
Sure. Can you give us a broad overview of Pendle, how it evolved from the original idea, and what the growth trajectory until now has looked like, and what enabled you guys to reach exponential takeoff?
Sure. One of the inspirations on why Pendle was built was during very early years of when DeFi was growing, particularly on DeFi summer, where there was a lot of like yield farming on different food tokens, and finance, for example. And then there's like a few more food tokens that came out that is generating a bunch of APYs, high yield generating protocols up to maybe 1,000%. And we've noticed there is no way to actually lock in those yields, because those types of yields could be very volatile. It could be 1,000% in one day and just become double digit or low for the next days or so. So I think there was a missing piece for enabling users to lock in rate yield, or to have a view on where the yield is going to. Hence, we built Pendle V1 during 2021 to enable this. It was a very complicated product at first, a lot of iterations that have been in. I would say how much friction it is for users to actually trade yield. Hence, we went back to the drawing board with the team and launched Pendle V2 last December 2022. What we pushed for our go-to-market to grow Pendle V2 was really having an interface that can enable trading of both volatile and fixed yields under one app. So it enables people to have speculations where the yield is going, whether up or down, and gives different assets that have been growing in DeFi. For example, there was the growth of LSDs, liquid staking derivatives, with ST-ETH, Rocket Pool ETH, where people can trade LSD yield in Pendle. Then came out restaking. So with like Eigenlayer, EtherFi, that have been generating different types of yield mechanisms with the underlying yield and with points. I think one of the ways that we're able to bring ourselves into DeFi and have that product market fit was when the points meta has started, where you can buy YTs and earn up to 25 multiples of points for these assets that are gonna token have a TG. and have these users to speculate on what is going to be the value through buying or selling YTs. So because of that, there is an impact where there is a group of folk that can have a future view and have it like a casino with YTs, see what is the future value that they can get, and another view where people who don't are not really strong on like volatility or like speculation to have fixed yields from their assets, whether ETH, Bitcoin, or stable coins. So because of that, we are able to grow into $1 billion protocol for TVL and trading volume, and see that there is a potential for having fixed yield, having volatile yield, and trading between the two. So far, we're able to have an all-time high TVL last year of like 14 billion. Currently, we're at 2.5 billion, but our accumulated trading volume for Pendle V2 since launch is around 80 billion now. So that is one of things that we have achieved over the span of 4 years when Pendle launched in 2021. Though we've noticed there is also a opportunity to grow outside on chain. Pendle V2 has focused on on-chain yields to speculate on, but we have also built Boros 6 months ago that can speculate on rates off-chain. So we are foraying to speculating off-chain rates through funding rates on different centralized exchanges and decentralized exchanges, such as Binance, Hyperliquid, for people to give a view on different funding rates to either buy or sell funding rates or have an arbitrage opportunity into those. So those are the things that we are building and continue to improve on.
Very nice. So to get a little deeper into the mechanics, maybe you're able to screen share and walk us through how the PTs and the YTs are priced and how people can navigate the platform. And maybe if you are opinionated about that, you can show your like current favorites in terms of YTs and PTs and explain what exactly people are speculating on each side.
Sure. I can give you a view. So I'm assuming we start with Pendle V2, right? So this is our dashboard for Pendle V2, where we have different markets for different yield-bearing assets. So you can have different categories or in different chains, such as you can trade yield on stables, yield on RWA assets, yield on Bitcoin, ETH, or whatever is available in Pendle. There are two routes. You can become a liquidity provider as an LP, or you can trade the market between PT and YT. So I'll just open an asset. Let's go with maybe very high liquidity first, maybe USDAI. So to USDAI, for example, is a market to trade yields of the stablecoin USDAI, where if you buy YT, you are buying yield on one stablecoin USDAI. So one YT USDAI corresponds to the yield of one USDAI. What's the underlying yield? It really depends on each protocol, right? So we have a market info tab to give you a view on what you are actually speculating on. For example, USDAI, you're speculating on the points for TGE. USDA has different quirks. You buy points to be eligible for the ICO or you be eligible for the airdrop. So these kinds of things are being taken by the user to speculate on if it's a good deal to buy the YT, to buy the amount of points and generate that during token generation events. PT, on the other hand, is actually buying a fixed yield on USDAI. So USDAI is a USD denominated asset, or what we call in the space like a stable coin. And buying PT-USDAI means you're getting a fixed yield on the underlying asset as long as you hold until maturity. So for example, this market matures at March 19, which is 21 days, and has an APY of 7.36%. So buying PT right now means you are eligible to get 7.36% APY of one PTUSDAI. So just to give a view here, one USDAI right now, based on the simulation that we have, is 1.0. Oh, maybe if I make it a bit higher, you can see. Yeah, so it's 100.4. So that's like the based on the effective fixed APY that you will get. So the higher the stablecoin amount that you purchase on PT, the higher like the returns you get by holding this for 21 days. So it doesn't mean if you buy PT or YT, you're locked in for the maturity date. You can withdraw anytime and enable to have that fixed rate or have that amount of YTs, right? So it also enables you to trade between PT and YT. Hence, we see in the chart that there is a fluctuation of implied APY or this APY chart. So which means if you buy PT at a very high implied at 8.33%, you can sell it at in a few days at 6.82, where you get that profit from that difference. And same goes for YT. If you buy YT at 5.35, you can sell it at 8.33%. So
you can think about
yep.
the PT like a bond in terms of pricing. So when the
Yep.
rate moves up, the fixed rate you could receive, if you bought it at, let's say, 6% and the rate moves up to 8%, if you want to exit early, you would likely exit as a loss. Whereas on the YTs, you would essentially make 33% if the IY moves from 6% to 8%, right?
Yes, correct. So rule of thumb is if you purchase YT and the implied goes up, then you are in profit. And then just at 180 degree, if you buy PT at a high implied rate, you can sell it and profit at the low implied rate. So if you buy PT at 8.3, you profit when you sell it at 7.
What would you say affects the pricing of like both sides of the market? Would you say it is largely driven by the demand for fixed rates? Let's say that lending rates on Aave decline, maybe Ifina rates decline, and there are just more people moving into PTs. So kind of regardless of the implied valuation of the points, etc., is it more driven by the larger PT side? Or would you say that the implied rate quickly reflects the opinion of a market on the valuation or the points valuation of the underlying project?
Yeah, I would say the movement of the implied APY of a certain protocol is dependent on the market activities and forces that enables it to do so. So when you mention about USDE, USDE has a lot of activities going on for its stablecoins that generates different types of yield. So one of the speculations back then for USDE or SUSDE is the generation of different airdrops, right, with different phases or seasons. And due to that, there were a lot of market forces that buy YT to get different airdrops during those seasons. This creates the APY to go up and have that impact to where the PT or the fixed rate of USDE starts to become attractive. So because of how it attracts from the increase of APY, there are a lot of different users on the other side of the table that is looking for fixed yield on stable coins and would buy the PT on those stable coins. So if you some of the charts, for example, at the 1 hour chart, there are people who are speculating on the future yield of SUSDE, could be the next airdrop. It could be maybe additional incentives why they buy YT. And people who are buying PT could be a speculation of because it's a good deal to get this fixed yield and maybe loop it or use it as collateral to borrow different assets in the market. What we have for Pendle is PTs are actually very capital efficient when it comes to borrowing and lending because buying PTs, you effectively have a fixed yield and you can use that as collateral, for example, to go to Aave, lend it and borrow a stable coin to use it for something else. Maybe you could loop it. Maybe you could use it as different things that needs to be done for off-chain or anything on-chain. So, for example, looping in Aave using your PTs can give you up to 17% APY. So, other end of the table is users figuring out the opportunity to how much fixed yield they can get on stable coins, different strategies, or different opportunities. And then YT is the other end where they are speculating on future returns.
So, do I assume correctly that Ifina was by far the largest driver of TVL and then also the ability to loop up the PTs? If I remember correctly, that was a very, very popular trade throughout the summer and fall months of 2025 until the October 10 liquidation cascade and kind of the downwards price action we've seen on BTC and on alts even more ever since. So, since that was one of the largest growth vectors for Pendle. And you are still maintaining that very symbiotic relationship with Ifina and many other protocols. What is your current growth strategy to get back above these TVL highs? Or would you even say that TVL has kind of devolved into a vanity metric and you're optimizing for different things right now?
Yeah, thanks for the question, Max. So yeah, I agree that Athena was one of our key players for last year once the stablecoin meta has appeared because they're one of like the innovative algorithmic stablecoins out there that enable different quirks, right? The airdrop, the way that they do their delta neutral to mint USDE, kind of like a low risk and enables like with different integrations across the space, different chains. And in the same way as they grow and use Pendle as their venue to trade the yield, we have also grown in mutual benefit. So because of Athena's growth and with us supporting Athena supporting Pendle, we're able to reach up to 10 billion TVL just with Athena alone. So this is also because of the meta and the bullish market that we had last year, where people were more high risk in deploying capital into DeFi, generating different yields. What we see now is different. The market has a downturn, agree, because of what happened like 1010 and like the other months. And it also affected yield. So we usually had fixed yields up to 20%, but now it's like playing around 9%, 8% because of like the market conditions. What we're seeing now is we're still playing the same playbook what we had last year, but improving it. So we'll still maintain our integrations with different stablecoins. The DeFi market is starting to pick in. We have a lot of inbound coming in for stablecoins and different quirks that are also coming in that can generate good yield. But also, we are looking at the RWA ecosystem where different TradFi markets bringing their different services, products, and assets off chain to on chain. So one of the things that we're venturing out that we just actually announced today was a Aave pool with Ripple and uh, wait, Pi USD, which is sorry, I forgot the name of this market. Pi USD. So these are the assets from RWA that we're looking at to work with, but we also have different RWA assets that we're looking to integrate that is maybe within the range of generating yield with gold, with silver and whatnot. So we are working on we're working on maintaining our strength in yield trading, supporting different stablecoin protocols that are continuing to grow, but we're also venturing towards real world assets that are generating real world yield into their stablecoin. Oh, sorry, this is PayPal. So PayPal and Ripple. So we just announced it today.
So when there is a new stablecoin issuer or somebody tokenizing GPOs, tokenizing data centers as a stablecoin-esque instrument, what is the process to getting listed as a Pendle market? How do the deployments work? And since you guys are also providing some info on all of these markets, is there any risk curation already on your side, or how does the user find out and assess if the risk reward and the risks of the underlying PT or even the YT, if it's, I mean, both related to the underlying asset, if it's worth the current yield?
Yeah, good question. So for Pendle, we actually have two fronts for listing assets. One is Pendle Prime and one is Pendle Community Listings. So Pendle Prime are pools that are either promoted from a community listed pool towards Pendle Prime and pools that are listed by Pendle itself. It's visible once you see like the Prime tab here, or it has this icon to where it was Pendle who listed it and has done due diligence or like deployment and audits for this. So in a sense, we've done our research, we've measured the risk and see if it's good to launch for these types of pools. In terms of the risk, right? We can say that we work for it to launch this pool, but we can't say it's a guaranteed risk free, right? Because everything in DeFi is not really risk free. On the other hand, we have community listed pools. So anyone who is building a yield bearing stable coin that wants to list in Pendle, we are open to have a conversation with them, but with certain maybe milestones that needs to be achieved first, because there's a number of inbound and some of them may not be able to continue their operations, or some of them needs to grow a bit more so that there could be activity for them to trade yield. So, for example, some of the assets is let's say SRUSDE by Strata, Bedrock. They can list their assets. We give them a framework on how to list them, auditing support as well, and just give them information on how to give them a range to trade yield based on our experience. So some of the pools you can see on the market info, it was initiated by Bedrock. So those are the things. But we also allow community listed pools to get a certain level of risk and security measures. Once we see the pool is growing in trading volume and TVL, then we promote these pools to Pendle Prime and have our own team to do like the auditing of the code, other risk security measures that we can recommend with the underlying protocol to just ensure that they're doing that they can get the same support as we do when we list our own pools.
How are the points multipliers calculated? Is that kind of negotiated out with the Pendle team? Is there any guidance? Because I would say that for the past 2 years where Pendle has really taken off, I think the objective of most YT traders was not to speculate on the underlying yield itself, but rather on the yield derived from these different points programs. I mean, on a bunch of episodes with a lot of people in the curation ecosystem, we've like debated the current state of points programs. Of course, it was a pure gold mine in 2024 and the most part of 2025. But it seems like the points excitement is slowly dying down. So, what role would you say do points play in the YT pricing and in overall trading activity? How are the multipliers priced? And how do you think Pendle markets will evolve when points probably not disappear, but maybe take a little bit of a back step?
Yep. I think I'll go first towards if points are here to stay. Based on what we've seen, there is still certain level of degeneracy that is active in farming points, really depending on like the underlying protocol's quirks, TGE models or like even their token models. So I would say points did plateau, it did evolve, but it has still that go-to market strategy that protocols can use on to create excitement and different insights, future views to where these points will go to, whether it be seasonal, maybe just a one-time TGE or whatnot. We're gone past where points can create insane valuations or insane value towards holders, but there is still a market for points. On our end, how points are built in certain pools, it really depends on how much the underlying protocol wants to provide in multipliers. We give them a recommendation, right, on what's like the current situation for our markets, how much multipliers are being provided by other teams that I would say like a certain range. And it's really up to them to how much multipliers they give to Pendle. But I would say some protocols that have given multiplier advantage to Pendle enabled our daily active users to be more active in trading into that pool because of how they're familiar with YTs and how YTs work. So we don't have a control on how much multiplier or points the protocol provides. We just give them a guide. But if they're able to give a benefit for our users, then I would say more activity has been growing because of that. Um, Other things in the future, I think points with different protocols that are doing yield bearing assets would still be a thing. But there's going to be an innovation on how this works.
Since Pendle is introducing duration to these assets, can you explain how the rollover works, how the expiry works? Because I think an underrated factor in a lot of DeFi strategies, and that is often overlooked by, both retail and allegedly more professional users, is just the execution costs, slippage, and there are still a lot of pitfalls in the industry. So how does LPing work? How does slippage work? And how do you roll over PTs or YTs once they're expired?
Sure. Sounds good. So for LP, once you provide liquidity in Pendle, you're actually providing LP of two assets. One is the psi, or the yield, which is pretty much the underlying asset, yield bearing asset, and PT. So for example, if I go to SUSDAI, you're actually providing here the breakdown of SUSDAI, which is a psi contract, pretty much the same as USDAI, and PT SUSDI, which means since they are both the same asset, it's just the other is in PT, you have very minimum impermanent loss because it's just the same asset. Providing liquidity in Pendle allows you to earn yield from the underlying because part of it is USDAI. You get a fixed yield because you hold PTs. You have LP yield where people trading SUSDAI, PT, or YT, you get 20% of that to swap fees. And then lastly is there are Pendle incentives that are being provided as a liquidity provider. So those
What
are
are
the
the
benefits.
swap fees, and
Mhm.
how is the IL determined? So is it basically a Uni V2 style pool, or is it a concentrated liquidity pool?
It is a concentrated liquidity pool. Each pool has a different yield range or yield band. It's seen here, for example, SUSDI has a yield band of 4% to 32%. So the liquidity is concentrated into there where people trade PT and YT and pay certain swap fees. So 20% of that goes to LPs, 80% goes to S-Pendle. Um, Other things, yeah. So having LP in terms of IL, the only reason you get IL if the implied yield or implied APY moves on during certain markets, because PT is dependent on the implied APY, right? However, if you LP and you hold it until maturity, then you are guaranteed up close to zero IL.
Mm. So how does the whole expiry, redemption, and rollover work?
Yes. So currently, rollover works by us launching a new maturity of the underlying pool, right? For example, let me go to a pool that is maybe maturing really soon. Um,
Yeah, on that note, it would be quite
yeah,
interesting to see, because there are some assets where you have several pools with several
yeah,
expiries, and some of
yes.
these expiries also trade at different implied yields. So how do these discrepancies come to be, and how can we understand them?
Yeah, sure. So, for example, SUSDAI has different pools. One of the reasons why it's in different maturity dates is because we launch once there's activity, trading volume, TBL growing into this yield bearing asset in Pendle, we launch a new maturity so that they can roll over towards that new maturity after the existing pool has matured. So different um, implied APY because there's different market forces that's being handled between the pools. There's a certain yield curve that happens, and based on our experience or like what we've seen for the past, is that the implied APY tends to be a bit more volatile once the maturity is less than 60 days. So it could have a volatile movement higher or lower compared to long dated pools, because long dated pools have less trading activity and it's pretty much like a set and forget where you park your assets. So it all of this pools depends on the market forces and traders that are trading in each pool. For example, if the SUSDI 21-day pool has a higher implied APY, maybe because they're speculating of the upcoming ICO or upcoming eligibility for the airdrop. Hence, the implied APY could be higher for this. While on the other hand, they are looking to just have fixed yield for long dated markets. How we start the pools is based on the yield range experience that we've noticed during the time frame of these pools. So we start the yield range, we build the yield range, and we start the implied APY range. And then we leave it up to the market forces to find equilibrium on what implied APY that market should be. So maybe I haven't checked this yet, but the APY here is at 7.81%. So it's quite volatile on different days. But on the long dated pools, let's say the October one, this is currently at 8.88. So this has a higher implied APY. Could be because of liquidity, but could also be on different users who bought YT in this market. But it's all dependent on the market forces.
Mm. Do you see a lot of short-term and opportunistic trading behavior once you get closer to expiry due to the higher volatility in rates? And what would you say causes that kind of erratic volatility and the range swings the closer you get to expiry? Is it just a lot of people exiting large positions, or what does it cause?
Yeah, I would say it would be that. For markets that are maturing in maybe like in 5 days or 4 days, we've seen a lot of activity that can move the implied APY because of people rolling over or finding a new market to move their LP or their PT to find better fixed yields. Once people withdraw in the pool with the amount of PDs, then the implied APY tends to rise. So what's the situation here, right? The YTs get, they lose because of the implied APY going up, but it also gives opportunity for late players to get that fixed yield for 5 days or 4 days and redeem that yield once the market has matured. I think that play has been quite, I would say, profitable for the early run of stable coins. But right now, I think a lot of people have figured that out. Hence, there's not really much volatility happening during the maturity period, near the
Like,
maturity
for
period.
example, how would that work on the PT side, given that you have costs to swap into the PT and to swap out of it? Like,
Yeah.
what if kind of the expected yield threshold you'd have to hit for it to be worth the execution and trading costs?
I think that's something that is needs to be done risk by the user. I honestly don't have like a certain number into this because I don't really trade by close to maturity. So they need to consider the price impact on how much liquidity is left for the coming days, and also like how much effective APY they get for the number of days. So in terms of liquidity wise, days coming towards maturity, there's going to be a lot of people exiting the market. But what allows Pendle to have certain trading activity still, despite the liquidity moving over, is because we have two types of liquidity for the market. One is our order book, and then the other is our LPs. So our order book enables users to add a limit order and get like certain benefits into this by just having their limit orders being taken as a maker fee. So you get maker benefits here and take advantage of the market. And then you also have the LPs who are still in the pool to still earn swap fees during that high volatile activity where people roll out, roll over or exit the market. That generates fees and benefits the LPs. So
Mhm.
liquidity wise, I think we're okay heading to maturity. It gives I would say, more benefit as an LPer because of the trading activity that happens.
Very nice. Before we move over to Boros, I think it would be interesting to discuss your recent Pendle and S-Pendle tokenomics revamp. So before that, you had a voted escrow model for V-Pendle, also with some surrounding applications like I think PenPy, um, Equilibria, quite a few. So yeah, what was your
Yes.
reasoning behind the revamp? What were the issues you identified with V-Pendle, and yeah, how is that going to impact long-term token holders going forward?
Yeah, the revamp from V-Pendle to S-Pendle is a year in the making, I would say. There's a lot of discussions with the team on how we can proceed in upgrading the token model. There's a firm belief that V-Pendle would still sustain, have like a certain growth impact for the years, but there's also a debate where maybe it's time to upgrade given like there is growing key metrics, TVL and trading volume, but the tendency of V-Pendle has not grown too much. Um, to be fair, based on our research, the VE Pendle is actually one of the worst performing VE models in the space, comparing with like the Arrow or like the Curve. One of the reasons is I think one is how channeling incentives using VE Pendle works, right? If you have VE Pendle, you vote on pools, you channel incentives towards pools. There are pools that are actually taking advantage of this where you can bribe in liquid lockers, PenPy, Equilibra, and whatnot to channel incentives. And some of the pools that we've seen are generating very low trading volume and TVL. I would say the channeling of incentives, 80% of that goes to the low activity pools, low trading volume, low TVL. So that doesn't make sense. Second was on locking V-Pendle. When you lock V-Pendle, you get a 2.5x boost as an LP where you can get higher yield. Our current TVL is at 2.5 billion, and we've noticed on chain only 10% are max boosting. So that also doesn't really make sense. The other is the, I would say, revenue and being passed towards V Pendle. So once you vote very well, you get certain fees in the market where 80% of the swap fees go to V Pendle. And we have a leaderboard. Top 100 are doing pretty well, up to 40% APR last year. But this does not encompass the whole Pendle ecosystem. I would say only the top 100 is benefiting into the VE Pendle model. So that really doesn't share the revenue benefit of V Pendle, right? So hence we transition to S Pendle, make it more like easier to learn, pretty much a stake and forget. Stake Pendle for S Pendle, get um, the fees that is being generated in Pendle V2 is used to buy back, buy S-Pendle and reward toward the S-Pendle stakers. So there is no more complications, no need to vote, no need to max lock, and no need to channel incentives across markets. We have an algorithm already in place for that that's currently operating. So it makes it simpler and it makes it also composable because V-Pendle, you require V-Pendle to be locked for certain years. S-Pendle is not locked. There is only a 14-day withdrawal period, or you can pay the 5% fee. It makes it more liquid for different users, whether you are a retail user, whether you have a fund with a 2-week mandate, liquidity mandate that needs to be liquid in case of certain times, and able to get back into their portfolio back into stablecoins or whatnot. So this gives more flexibility for any type of user to be participating in the Pendle ecosystem.
Who would you say has been most excited about the tokenomics revamp of all your user groups, like both related to depositing more into Pendle the platform, but also accumulating more of the tokens? Would you say, is it mostly retail driven? Is it liquid fund driven? Or protocols like using their treasuries to earn some yield? What is the current user map looking like?
I would say it benefits both parties, right? The retail users, people who are speculating on the token. I mean, three parties, and also institutions. We've communicated with the top 100 V Pendle leaderboard voters who are doing pretty good. they are quite optimistic on our approach. For the retail users, it enables them to have flexibility with their Pendle token. Given how S-Pendle will also be composable, they can be used as maybe a lending asset once it's supported by a money market. Institutions who are having complications with their liquidity mandate, where they cannot lock their tokens for more than 2 weeks or 4 weeks, they have now flexibility to participate in Pendle without the need of those restrictions. So it highlights the institutions to be able to participate in without the liquidity crunch, the liquidity mandate. It allows retail to join in without also having the need to understand how VE works. Just really stake forget. Also allows different DeFi users to have that asset to be used as collateral maybe soon. So we're working on that front too.
Mm. So to move over to Boros, how did the idea of Boros emerge? Can you walk us through the platform and how is it symbiotic together with Pendle?
Sure. The ideation of Boros is actually done 3 years back. When Pendle V2 was launched, we had different discussions with the team. Mostly the co-founders had this idea to where if we're able to trade yields on-chain, why can't we trade rates and yield off-chain? So hence, this is like where Boros has ideated from and has been launched for 6 months now. So Boros is, I would say, in a sense, within the niche of where Pendle umbrella is, because you trade rates and yield, but it gives a different market target or addressable market compared to Pendle V2. Pendle V2 supports different yield bearing assets on chain. Boros can support on chain assets too, but it also can also support off chain rates. So this is the interface of Boros. What we have now is the Boros interface. What we're trading here is funding rates at the moment. Though Boros is a product that we're looking to expand, not only in funding rates, maybe we can trade staking yield, lending rates, other maybe like rates across like bonds or other rates that is seen in the future. But for now, we'll stick with funding rates. So different markets are available on Boros to trade the rates, the funding rates of different exchanges. So if you have a view of, for example, in Binance where Bitcoin USDT is being traded and you want to trade the funding rate, you think that the price of Bitcoin goes down, then definitely a lot of perps are doing a short, which brings down the funding rate, right? So you can actually trade the funding rate of that in Boros. I would say to keep it a bit like connected in a sense of Pendle V2, it's like you're trading YT but with leverage.
Mm.
So you can short YT here or can long YT depending on your view. So there's also an implied and there's also an underlying. It's basically trading the future view of rate. It's like perps trading the future view of price. In that sense.
Who has been using Boros so far? Is it mostly used by sizable perp traders? Is it used by funding rate speculators independent of them actually trading the underlying perp? And what's the path to growth right now?
Sure. Currently, we have around 300 daily active users trading different rates available in Boros markets. We have around 150 million in open interest. Our highest OI was around 300, if I'm not mistaken. It's because of different players that are taking advantage of trading rates. Retail, trade, same, have the same mindset as a perp trader. They see that the price of a market, for example, Bitcoin USDT, is going down, then I would say the funding rates would follow, right? Some say the funding rate tends to lag against price. So if they miss the meat of the price, then they go to the funding rates to short and take advantage of the lagging sense of funding rates. Others would say otherwise. That's for retail. It's also based on what they have for fundamentals. It's pretty much a game of like how perps works as well, since Boros is a derivative. For institutions, they are using Boros for hedging. their funding rates. So they have a delta neutral position that earns that they profit from the basis points, right? So they use different combination strategies from trading in a centralized exchange like Binance and hedging the funding rate into Boros. Liquidity wise, we're working on it, but we also have different matchmaking deals that we do with offices, funds that wants to hedge their rates in Boros. So it's more of like an OTC market, but we're also improving that in the UI front to enable different funding rates to hedge their positions and to have a delta neutral strategy and earning the yield from doing delta neutral on rates.
What are the economics of Boros like right now? Is there any type of trading fee implemented? Is there any way to earn on Boros besides taking a directional stance on rates? And how does the value created by Boros flow back into the Pendle ecosystem?
Sure. We do have a vault. So it's pretty much an AMM that where you can deposit and earn fees in different markets. So you can earn fees if you deposit in Bitcoin USDC, and act as liquidity provision for that market. It's sort of like a long YU position. It's a long position on the rates, but you earn fees from that. So currently, the fees that's being generated, sorry, for the vault, I mean you're earning Pendle incentives here. The fees that are currently being generated in Boros is not yet being flown to Pendle V2. Reason being is operating Boros takes a lot of resources and we're still growing the product. It's not even a year old. So there's a lot of iterations, improvements that we are using these resources to build Boros. But once we get the certain traction and milestone that we are looking to achieve, then certain percentage of the fees will flow into S-Pendle. As for the target timeline, I cannot say yet. There's still a lot of improvements, and actually, we do have a lot of exciting announcements coming soon in the next months, days, and weeks as well. So stick around for that. But for now, Boros is finding its market fit in the market and generating the fees to make it operable. In terms of metrics, I would say Boros, in terms of trading volume, is faster than Pendle V2. We achieved 1 billion um, OI, notional trading volume, in less than a year. Compared to when Pendle V2 started, we reached 1 billion for a year. So Boros growth is quite significant compared to Pendle V2. However, it's still complicated and we are improving the system.
If you wanted to get started on Boros right now, where can people check out the education? I know you have a very good like large language model assistant on Pendle. Is he available on Boros as well, or like how can I would say that trading funding rates and interest derivatives is still one of the more complex things to do in DeFi
Yep.
in terms of understanding the underlying math. So like, are there any very high level basic strategies you would recommend people to check out or to learn about in order to use the products?
Yes, we do have a number of educational resources, but I would say before that, we've also experienced this where the product is complicated and needs to have that certain product market fit for it to grow. Same as how Pendle V2 launched. Not a lot of people actually know what PT and YT is and how to trade PT and YT. But because of different educational sources and also that certain product market fit to have that interest of different types of users like LSDs, restaking, the points meta, and all that, able to get, I would say, we were able to bring Pendle V2 close to top DeFi protocols out there. Then we would say that will also be the same way for Boros. We just need to find that certain product market fit, which we are experimenting on, whether it be long tail assets with different volatile funding rates or other things. Educational wise, we have the get started view where if you don't know how the implied APR, underlying APR works, you can just check the asset, which exchange, and what's the current funding rate. If you do a short or long, this is the potential ROI that you can get across this maturity. Makes it simple as that. If you think that this makes sense, then you can start the trade. But in not, they can also have going towards our Learn page. We have Boros Academy, our in-app walkthrough, and we will also have some educational videos coming out very soon.
Mm.
We also have our very active Discord. Our Discord is there 24/7. We have a lot of our community moderators that are very um, pretty smart. They're actually better than me in trading Boros, and also different Telegram groups. We have a Boros trading group, BTC for short. If you are interested to learn more, I'm happy to bring people in and hear about different strategies from like users who are trading here.
Yeah, I'll certainly include these links in the podcast description. Maybe one last topic before I let you go. Where do you see the trajectory of assets go towards? I was just at ETH Denver, and the number one talking point of all the DeFi, Vault, curation people was RWAs, tokenizing stuff, and essentially bringing yield sources from traditional finance on chain. How do you think that will affect the asset trajectory of what is available and what will be of interest on Pendle and also on Boros going forward?
Yeah, I agree on that point with ETH Denver. I do believe RWA is something that we're also looking at. It's also a niche or like a trend that we are observing and how we can support. Like Pendle V2, we have PayPal, we have Ripple, and then maybe we have like different creators, service providers that goes to DeFi on chain to trade yield. But that our focus for this year would also be on RWA, whether we can do RWA yield bearing assets or RWA assets to trade the funding rates on Boros, or different RWA funding rates that can be traded on Boros. We're still observing on that front, but we're also open to different changes in the market. So while we do that, we support RWA for now. We're pretty much full throttle into the RWA space, but we're also improving our protocol. I remember you mentioned, Max, about PT rollovers, which is a bit tough for users. We are improving in that to make it simpler. I can't say much yet, but there's going to be a big revamp for Pendle V2. So do look forward to that. Boros, there is also going to be something exciting. I can't also share yet, but we will have our Pendle roadmap in a few days. It's not going to be specific on how the improvements work, but it's how where our direction will be. It's but yeah, really on empowering how Pendulum, sticking to what our roots are, growing towards different narratives that grow, such as RWA. And Boros is to ignite what we have done with a Pendle V2, back to the drawing board, experimentation, and everything else. Yeah, finer details will be shared in the next weeks, months. So stay tuned to what we have.
I'm very much looking forward to that and generally everything that is on the way to be launched in and around Pendle. I'll make sure to include all the contact details, the Discord, the Telegram links in the podcast descriptions. People can reach out. I would highly recommend checking out Pendle. I think it really deepens your understanding of DeFi, and since the trend of DeFi converging more and more with traditional finance instruments, I do think it's an essential part of the overall DeFi learning journey. As a last quick question, RightSide, who are two other projects or two other guests you'd like to see on the podcast? They can be attached to the ecosystem of Pendle, don't have to. Feel free to suggest anybody.
Oh, that's a tough question, but interesting one as well. I think I would like to see something in the perp market space and lending market. Lending market, there's a lot of innovations happening, maybe under collateralized lending assets and all that. But we're quite intrigued. Well, personally, I am intrigued with Morpho, or also with how the borrowing and lending goes to have a good or like low price impact liquidity is with Fluid. For the perp markets, definitely Hyperliquid. They've been really doing so much in the space with HIP3 and all of like the improvements that they have. So having Hyperliquid would be fun to learn. We are also very much a fan of how Hyperliquid just stays and build.
Yeah, it is hard not to admire what they've done over the past couple of years. Thanks a ton for coming on. I really enjoyed our conversation. I would love to do another episode, maybe together with Infinify or any of the protocols that are utilizing a lot of Pendle assets and a lot of Pendle instruments to dive deeper into the various strategies you can implement both on Pendle and on Boros. Would be amazing to have you back. Thanks a lot for joining and have a great evening.
Yes, thank you, Max. Pleasure to join in Odyssey, and looking forward to get to you guys growing as well, and looking forward to more content that you guys are sharing.